Imagine firing the very engineers who built your trillion-dollar tech company.
Right.
Just so you can scrape together enough cash to buy the physical computer chips that will, ultimately replace those exact same engineers.
It's a wild scenario.
It really is. Welcome to Tech Money Madness, your daily U.S. stock market deep dive. I'm glad you're joining us today.
Yeah, thanks for being here.
So today is April 23, 2026, and we are looking at a daily market briefing that is, it's basically dismantling this illusion that our digital economy is somehow immune to the physical world.
Oh, absolutely. The market today is the definition of a mixed day.
Totally. Major indexes are moving in completely opposite directions. Tech companies are, kind of tearing themselves apart from the inside out.
Yeah, while the ancient foundational hardware manufacturers are suddenly the most valuable properties on Earth.
Exactly. Okay, let's unpack this. Because to understand the tech chaos, we really have to look at what's happening in the physical world first.
It is a massive structural realignment.
Yeah.
For the last 20 years, the consensus was just, software eats the world.
Right, that digital companies just float above the messy realities of, geography or raw materials.
Yeah, or energy grids. But what this briefing shows us is the exact opposite. The digital economy is currently crashing headfirst into hard physical constraints.
And to understand those constraints, we have to start with the most basic physical input of all, which is energy.
Right. Energy is everything.
The briefing shows Brent crude oil surging past $105 a barrel today.
Which is a huge jump.
Yeah, and the direct catalyst is escalating tension in the Middle East, specifically around the Strait of Hormuz.
Yeah.
Now, I understand that, geopolitical friction causes market anxiety, but mechanically, why does a regional tension instantly price into the broader market so aggressively?
Well, it comes into physical bottlenecks. The Strait of Hormuz is this incredibly narrow stretch of water, right? And roughly a fifth of the world's total oil consumption passes through it every single day.
Wow, a fifth.
It's a massive physical choke point.
Right.
You can't, digitize the transport of crude oil. You can't just route around it with a software update.
Right, like an internet outage.
Exactly. If vessels cannot safely traverse that specific geographic channel, the global supply of raw energy just shrinks immediately.
Which explains the severity of the statement from the International Energy Agency today.
Oh yeah, the IEA chief did not mince words.
No, he didn't. The briefing notes he came out and warned that the world is facing the, quote, biggest energy security threat in history.
When a global monitoring body uses language that absolute, the ripple effects just hit corporate balance sheets instantly.
And we're seeing that play out with American Airlines today.
Definitely.
They just completely slashed their 2026 earnings forecast.
And look at the mechanism of that earnings cut.
Right.
It wasn't because, consumer demand for travel evaporated.
Right. It wasn't a labor dispute or anything.
No, it was entirely driven by the sudden surge in jet fuel costs.
It's like, I kind of picture the economy as a hot air balloon, right?
Okay, I like that.
So the airlines and the consumers, we're all just sitting in the basket. But global energy tensions are the flames actually pulling it in unpredictable directions.
That's a great way to put it. An airline operates on a model where fuel is obviously one of its largest variable expenses.
Yeah.
They sell you a ticket months in advance at a fixed price. If the cost of the physical fuel to fly that plane suddenly skyrockets by 20%.
Because of tensions thousands of miles away.
Exactly. They can't dynamically change the price of the ticket you already bought. That margin just vanishes.
Which basically turns an airline into a massive, highly vulnerable energy derivatives trader.
That happens to fly passengers on the side.
Right. So, is the market underestimating how much physical geography still controls our digital economy?
Oh, entirely. And if we connect this to the bigger picture, you can see how these physical energy constraints are forcing government policy to step in.
Right, because we are seeing two major regulatory actions from the Trump administration today that are really moving money around.
We are. And analyzing these moves from a strict market mechanics perspective shows just how heavily dependent capital is on federal policy.
Yeah. The first action is the administration warning of a potential government rescue for Spirit Airlines, which has been severely struggling.
Yeah, really struggling.
I want to pause on that, though, because intervening in a specific private company's potential failure seems kind of at odds with a traditional free market approach.
It does on the surface, yeah.
So why float a rescue for a discount airline?
Because it fundamentally changes the risk models for institutional investors. When a government signals it might backstop a failing airline, it's tacitly admitting that certain domestic transportation networks are just critical infrastructure.
Ah, they're too important to the physical movement of the economy to be allowed to collapse.
Exactly. Even if their specific business model fails under the weight of surging energy costs, it tells investors that the floor on transportation stocks might actually be artificial.
Subsidized by government intervention. That makes sense. The physical infrastructure has to be maintained, regardless of whose logo is on the side of the plane.
Precisely. And the second regulatory move from the administration today operates on a similar principle of, unlocking constrained capital.
But in a totally different sector.
Right. They're moving to reclassify cannabis as a Schedule III substance.
Now, this is a highly specific legal mechanism that I feel like the market frequently misinterprets.
Oh, all the time. It is crucial to look at what the sources explicitly state here.
Right, because reclassifying to Schedule 32 does not legalize cannabis at the federal level.
No, it doesn't.
It does not erase federal penalties for recreational possession or distribution.
Exactly.
So if it doesn't change the consumer reality, why does the market care? Like, what is the actual mechanical shift here?
The shift happens entirely in the laboratories. Under a Schedule A classification, the federal government treats a substance as having no medical value.
And a high potential for abuse, right?
Right. And that classification makes it nearly impossible for legitimate pharmaceutical companies or universities to secure federal funding.
Or even just the basic legal clearance to conduct clinical trials.
Exactly. By
Yes.
moving it to Schedule 3, the FDA and DEA are dismantling that specific bureaucratic wall.
Oh, wow. So it allows multi-billion-dollar biotech and pharma companies to legally deploy their R&D budgets into cannabis-based medicine.
Yes. Without risking their federal charters, it unlocks a massive wave of institutional research capital.
So again, government policy physically opening a gate for capital to flow through.
Exactly.
But okay, let's look at the other side of the market. Because if physical constraints and energy costs are crushing margins in the real world, you would expect the digital world to be a safe haven today.
You would think so.
The tech sector supposedly operates in the cloud. But looking at the tech numbers in this briefing, it's just an absolute slaughterhouse.
It is a profound paradox. The tech sector is flush with cash, yet they are aggressively dismantling their own workforces.
We are seeing massive structural shifts announced today. Microsoft is executing its first ever voluntary employee buyout.
Yeah, targeting up to 7% of its U.S. workforce.
And Meta is cutting 10% of its staff. And they explicitly stated the cuts are to free up capital to invest in artificial intelligence.
And, this isn't isolated to just software companies.
Right. Nike announced 1,400 layoffs today.
Heavily concentrated in their technology department.
And the market punished them for it. Their stock dropped 8% today.
The Nike example is particularly telling. I mean, here is a footwear and apparel company that built a massive internal tech infrastructure over the last decade.
Because every brand had to become a quote-unquote tech company.
Right. And now they are unwinding that entire philosophy.
But I have to challenge the narrative here.
Okay, go for it.
Here's where it gets really interesting. If you're an investor looking at Microsoft and Meta shedding thousands of jobs, is this genuinely a transition to a new AI-driven economy? Or are these executives just using AI as a convenient excuse to trim all that pandemic-era bloat?
That's a fair question.
It just feels like a very convenient cover story for standard corporate belt-tightening.
I get that. But if it were just belt-tightening, we would see that capital sit on the balance sheet or, go directly into stock buybacks.
Okay, true.
But that is not what is happening. We are watching a ruthless historic reallocation of capital from human labor directly into computing power.
Wow.
And to understand why, you have to look at the capabilities of the technology driving this panic.
You're talking about OpenAI's announcement today.
Exactly.
And the briefing details the release of GPT 5.5, and the specific language used to describe its capabilities is what really caught my attention.
Yeah, it's wild.
It states the model has superior capabilities in coding and natively using computers. I want to dig into that phrase, natively using computers.
It changes everything.
We're not just talking about a chatbot generating text anymore, are we?
No, we are not. And this is the exact mechanism driving the layoffs. Until now, you interacted with AI through a specific window, a chat interface.
Right, you ask it a question, it gives you text.
And then a human had to copy that text, open another program, and apply it. Native use means the AI model can directly interact with the operating system itself.
Wait, so it actually moves the cursor?
Yes, It can move the cursor, open a terminal, write a script, execute the code, open a database, and verify the results.
It removes the human intermediary entirely.
Exactly.
Okay, that clarifies so much of the market carnage today. Because if you look at traditional enterprise software companies like ServiceNow, which is down 16% today,
Yeah.
or IBM, down 12%, those massive drops suddenly make mechanical sense.
Think of traditional enterprise software like a massive, expensive passenger train system.
Okay.
Companies like ServiceNow or IBM lay down these rigid tracks within a corporation. You buy the expensive licenses, train your employees to use their specific interface, and the data can only go where those tracks lead.
It requires constant maintenance, tech support, massive overhead.
Right. And an AI that can natively use a computer completely bypasses the train tracks.
Because it's like an off-road vehicle.
Precisely. If the AI can natively navigate your company's existing operating systems, it acts like an off-road vehicle for every single employee.
You don't need a multi-million-dollar contract with an enterprise software provider to build a custom workflow anymore.
No, you simply instruct the AI to open the local files, format the data, and email the report.
So the foundational business model of massive, rigid software-as-a-service platforms is just being fundamentally undermined.
Yes, by native AI execution.
If you are listening to this and your job involves managing cloud infrastructure or providing IT support hearing that an AI can natively open a terminal and execute code,
It's sobering.
it is the exact moment you realize your job isn't competing with a cheaper human contractor anymore. It's competing with a server farm.
And the stakes for this specific capability are so high that it is bleeding directly into national security.
Which is why we see the White House issuing a severe warning today.
Right.
The briefing notes a serious warning from the White House regarding, quote, industrial-scale efforts by China to rip off U.S. AI tech.
This elevates AI from just a commercial enterprise tool to a geopolitical weapon.
Think about the mechanism we just discussed. If an AI model can natively operate an operating system to manage a company's database,
That exact same capability allows it to natively operate the software controlling a municipal water treatment plant.
oh, wow, or the routing protocols for a national telecommunications grid.
Exactly. The intellectual property behind models like GPT 5.5 is no longer just about generating corporate efficiency
It's the underlying architecture for how future digital infrastructure will be controlled.
and defended. The administration is signaling that advanced AI models are strategic national assets.
Okay, so we have legacy software companies crashing. We have tech giants firing thousands of their own engineers to free up cash. If all of this massive capital is fleeing the traditional software layer, where exactly is it landing?
Someone has to be catching these billions of dollars.
Right. And the briefing provides an incredibly clear, almost ironic answer. The money is flowing aggressively back into physical hardware.
It is the ultimate vindication for the physical manufacturing sector.
After decades of software engineers commanding the highest valuations, the market has abruptly realized that algorithms cannot run on air.
No, they require metal, silicon, and extreme engineering.
Look at today's massive gainers. Texas Instruments jumped 19% on a revenue beat and upbeat guidance.
19% is massive for them.
Huge. Intel, a company that analysts have essentially treated as a legacy dinosaur for the last decade, soared 16% today.
After showing renewed growth.
And Dover is up 10%. But the trading volume tells the real story. NVIDIA traded 107.5 million shares today.
Insane volume.
Apple traded over 43 million. Microsoft was a distant third at 29 million.
The volume is completely dominated by the companies manufacturing the physical brains of the computers.
So what does this all mean? After decades of software eating the world, are we entering an era where hardware is king again?
What's fascinating here is the pattern. To understand why hardware is suddenly the most valuable sector on Earth, you have to look at the architectural demands of artificial intelligence.
Okay.
Traditional software runs on sequential logic. It processes one instruction at a time.
Yeah.
And legacy hardware was built for that.
Right.
But training an AI model requires processing millions of calculations simultaneously. It requires parallel processing. It has a fundamentally different physical architecture.
Which means the old microchips physically cannot handle the new software.
Exactly. Custom silicon is the real pick and shovel of the AI gold rush.
Ah.
The bottleneck in technology is no longer the ingenuity of the software developer. The bottleneck is the physical limitation of the silicon chip.
Like how much data it can process simultaneously and how much heat it generates while doing it.
Yes. Companies like Texas Instruments, which manufactures analog chips that manage power distribution in these massive server farms.
And Intel, which provides the foundry capacity to physically print these microscopic architectures.
They are suddenly the single point of failure for the entire AI revolution.
They hold the physical keys to the digital kingdom, which brings us to the massive leadership bombshell dropped by Apple today.
This is huge news.
The briefing notes that Apple is officially announcing John Ternus will take over as CEO in September of 2026.
Yep.
Now, Apple has historically been run by supply chain and operations experts like Tim Cook, but the briefing specifically defines Ternus as an engineering prodigy.
Which signals a massive structural pivot for the largest tech company in the world.
Right. It indicates Apple is officially shifting its core focus heavily toward hardware innovation and custom silicon.
Absolutely.
Why is it so critical for Apple to put a pure hardware engineer at the helm right now?
Because Apple understands the mechanical reality of the AI transition. If you rely on third-party hardware, if you have to buy your chips from NVIDIA or rent your server space from someone else,
Your profit margins will eventually be squeezed to zero by the companies that own the physical metal.
exactly. To survive the next decade, a technology company must control its own physical layer.
They have to design and integrate their own custom silicon from the ground up.
Yes, to handle native AI execution on the device itself, without relying entirely on the cloud. Putting an engineering prodigy in the CEO chair is Apple's declaration that the era of software dominance is over.
Hardware is the only moat left.
It really is.
It is an incredible full circle moment. We spent 20 years building this vast, weightless digital economy, and it turns out the ultimate winner is the physical manufacturing of advanced sand.
It's pretty poetic.
When you look at the entire narrative of today's briefing, a very clear through line emerges. It is the story of physical reality crashing into the digital myth.
It is. We started by looking at raw geography, the physical bottleneck of the Strait of Hormuz choking the global oil supply,
Driving Brent crude over $105.
and instantly destroying the forward earnings of airlines who cannot escape the physical cost of jet fuel.
We saw how that physical constraint forces government policy to step in, whether it's floating a rescue for a private transportation network like Spirit Airlines,
Or legally unblocking institutional capital to research cannabis by reclassifying it to Schedule 3.
Then we looked at the digital sector, where companies are aggressively dismantling their human workforces. Meta and Microsoft shedding thousands of jobs.
Not to shrink, but to afford the massive capital transition toward artificial intelligence.
Right. Models like GPT 5.5 that can natively operate operating systems, directly threatening the business models of traditional enterprise software giants.
And finally, we tracked where all that capital is flowing, straight into the foundries and manufacturing plants of companies like Intel and Texas Instruments.
The undeniable realization that the future of artificial intelligence is physically bounded by custom silicon.
A reality so stark that Apple is handing the entire company over to a hardware engineer to ensure they control their own physical destiny.
If you are managing a portfolio or building a business or mapping out your own career, the lesson from today's data is to relentlessly seek out the physical mechanism behind the digital headline.
Value is migrating back to the companies that build, move, and power the tangible world.
And speaking of powering the physical world, I want to leave you with one final thought to consider.
It is a good point.
We spent this entire deep dive detailing how AI requires an immense amount of capital and custom hardware to function, but that hardware requires something else. Training and running models like GPT 5.5 requires an unprecedented, staggering amount of physical electricity.
Huge amounts.
Server farms draw massive power from the grid to process the data, and even more power just to cool the physical chips.
And this brings us right back to the beginning of our discussion. As the technology sector demands exponential increases in electricity to fuel this AI arms race, the International Energy Agency is actively warning of the greatest historic threats to our global energy security.
Right. So if oil continues to spike and supply chains remain physically constrained,
Are we heading for a catastrophic collision?
a moment where our limitless digital ambitions are suddenly and violently capped by the physical limitations of our power grid?
It is a vital question. It really forces us to look past the software and stare directly at the physical infrastructure keeping it all alive.
It really does. Well, thank you for joining us on this deep dive into the real mechanics driving today's market chaos.
Thanks for listening.
Keep asking how things actually work, keep looking for the physical realities behind the digital numbers, and most importantly, stay curious. That's all for today's deep dive on tech money madness. Don't forget to like, subscribe, and we'll see you tomorrow for more market coverage.